Hey, good afternoon. This is Trader Tim from EminiMind, and in today's video, we're going to do a trade recap, run through all of the trades that I took this week. If you like these kind of videos, give it a thumbs up, and that'll help me know that you like them. The other thing I want to show you is, before I do that, is just a little trick for Thinkorswim. So if you're on Thinkorswim and you want to see the overnight trade data, so you notice my chart, I've got this dotted line. This is a 15-minute chart on the ES, and I just have the trading hours only data shown. I don't have the overnight session. But if I go up here to my studies, I have this little box, show extended hours trading session. I can click that, and then I can easily see the overnight trade data, and it's very easy to see where the overnight is because I have volume shown on the chart, and that's really the reason that I keep volume on the ES chart like this, is so that if I do look at the overnight session, I can see, okay, here is the trading hours only trade area because volume's, much higher, and then the overnight session, there's basically very little trade volume. So to add that little shortcut here, just go up to your settings under the Studies tab, and then you'll go over to Futures here, and then any of these little boxes that you can check or uncheck, if you come down to Show Extended Trading Hours and just click this little arrow within the box, that will add a shortcut to your studies menu. So then you can just toggle down, show extended, and then turn it off. You can also do, I think you can do some hotkeys and like keyboard shortcuts too, but I like having it there, and I can just click it on and off real easy to, like in the morning before the open, I'll look at the trading from the overnight session. Where's the overnight high and low? Did we trade above or below the prior day's close? So like here I can see the prior day's close, and obviously we're already well into today, Thursday. But if we pretend like this was the morning, I can go back here and see, okay, well, most of the trade data this overnight session traded above yesterday's close up until the wee hours here, and then we kind of dropped down right before the open. We had an overnight high that was above yesterday's high, and then a little bit of a spike here right at the open that took us, notice, right to that overnight high. So that's some helpful information. If you're trying to carry over retracements, I also like to do that without the overnight trade data, because then I can see, okay, we're moving up in a halfway back long here on the 5-minute chart. Low to high. We'll draw a low to this morning's high. It breaks, and then we can start drawing in the other direction. If you have the overnight trade data on, sometimes you end up with these periods where like it's just a whole bunch of chop, and since volume is so low in the overnight session, I just don't put as much weight on it and don't bother drawing the retracements in the overnight hours. All right, so let's get into the trades for the week. I'm going to go Monday to today, and there's not too many trades. 1, 2, 3, 4, 5, only 6 trades. So it was a pretty slower week, but there's some good nuggets in here that I want to run by you. So the first one on Monday is, let's see, Monday is the 10th, the 11th. My daughter's birthday, the 11th. I should know that. So Monday was the 11th, and if we come over here, we had a 15-minute breakout. I did talk about this on Monday's market analysis video, so I won't go too much into depth, but first 15-minute bar broke the low of that on the 4th candle, so I just did a sell stop 1 tick below that low, and then I just trailed my stop above here, above each of these candle highs on the way down. So every time the next candle, like when this red candle here closes and the next candle begins to form, then I will move my stop above that red candle. Then when this green candle closes, 7:45 my time it started, so 8 o'clock it closes, then this next candle starts to form, then I bring my stop above that candle. And kind of slow at first, only moving it a couple points at a time. And then this candle moved it down, so that one was 7.5 points. Didn't have any retracement trades on Monday. Tuesday we do the live trading session, so if you're in the room, we did all this in real time, but I'll run through it again. This one had a 15-minute breakout to the upside. You can see here's the first 15-minute candle. It broke above. I had a tick of slippage on this one, doing a buy stop, which sometimes happens, but a tick isn't a super big deal. And then I'm using a 4-point stop and a 20-point target. Now, unfortunately, this one went like 16 and a half points. And then it came down, and we ended up going back to lows of the day, and then even lower. I did have a trader shoot me a note and say, well, what if instead of a 20-point target, we used a 10-point target or a 15-point target? And I don't do a lot of back testing per se, but since I have all the all of these trades already taken in my trade log, I did go back. I was curious myself, so I did go back and look. Using a 10-point target, no good. It's still decent reward to risk, a 4-point stop with a 10-point target, but so many of these trades go 20, 25 points that you're leaving a lot on the table. 15 points, however, it was close. It was slightly more profitable over the last year and a half or so of trades that I went through. So a 15-point target versus a 20-point target. 15 did outdo the 20-point by just a touch. And you can make the case that if volatility goes down, then we're more likely to hit a 15-point target. And in yesterday's trade, 15 points would have gotten you filled. So I'm still on the fence whether I'll bring it down from 20 to 15. But one thing that I did notice is at 10 points, when I'm 10 points of profit in the trade or unrealized gain, when the trade goes 10 points my way, I've been moving my stop to break even. But it's more of an arbitrary thing just to make sure that I don't take a loser on the trade. But what I did notice is that I could actually move my stop to +4. And the losing trades, like where it went +10 and then rolled over, they still ended up being, rolling over and stopping me out, whether I use +4 or break even. I did not really miss out on any winners because of, I think there was 1 out of 20 that ended up where it would have gotten to that 20-point target, but had I moved my stop to +4, I'd be taken out early. But there were so many more trades that instead of taking a break even, I'm getting a +4, which at the very least is a 1-to-1 reward to risk. +4, -4. So I am considering doing that when it gets to +10, move my stop to +4. I had a couple folks who were, they wanted to move their stop to break even plus commission, and the reward to risk on that, even if you're just taking a +1 point and you're risking 4, is not so great. So I'd be more okay doing a +4 when the market goes +10 in your favor. So that was the trade on Tuesday, and then later in the morning, let me get back on my tick chart here to the 12th. Later in the morning, I took I'm gonna get all the way to the 12th, and it was. So I'm on with Arizona. We don't do daylight savings, which is nice. But in the summer we're on Pacific, and in the winter we're on Mountain. So right now, all my times tend to stay. I think I keep it at 6:30 open. All the times down here at the bottom of my chart. So we are looking at 7:54. It was right before kind of the end of the session. And the 12th, and that was a micro long, 754. Why doesn't that seem right? Oh yeah, this was off the 30-minute low. Was that right? Yeah. $7.54. It was here, and that was a long, and that went got a first target, and then that was really about it. That was here. So we came down to lows of the day, and was hoping for a little bit more of a bounce. I wasn't able to stay in it. Got taken out by trailing. Got the +3, and then moved my stop to break even, and that's where I was taken out. Then it came all the way back down, retested lows, and then got a little bit bigger of a pop. But that was really it. There was a Oh yeah, there was a straddle. Actually, I won't go too much into that. You can watch the replay on Tuesday because there was one of those on Wednesday that I can also highlight here. And let me just check my notes. Okay. Okay, Wednesday. Going over to Wednesday, just one trade again, and Wednesday was right at the top of the hour. And this was a straddle, meaning we had a long. I call it a straddle. Here's the long. I'll go to a 5-minute chart, and you can see a retracement on the 5-minute chart. We came down to the 50% long, but then we very quickly broke it. And so that is right here. And so when that happens, sometimes what I like to do is take swing high from below or from the before the 50%. So this is a 50% long that broke. So once it breaks, I will sometimes look at taking a short right away. And let's see, it was a 97. So I drew it like this. Swing high from before to the swing high after the 60-18, and that one ended up stopping me out. But there was one the day before on Tuesday that ended up actually working out pretty well. I did not take it, but I took the one on Wednesday, and that was didn't really do much. It got a little bit of a reaction twice and then came up and stopped me out. So the couple of 15-minute breakouts, couple of small micros, and then that brings us to today, which will probably be the most relevant and helpful for everyone because it's fresh in your mind. So there's really two places you can look for, two main places that I'm looking for 50% retracements. I'm entering on the 512 tick chart, but the two things that you can do are use the 5-minute to draw up a retracement, and then when it trades, so like one trade I'm going to show you today, the 5-minute trades at the 50% here, and then come to the 512 and draw the first setup in that same direction. So the 5-minute was a short, so then I draw it on the 512. That's a short, and that gives me the first entry into the potential, the new trend. I've seen resistance on the 5-minute, and then I'm taking it on the 512. So this is actually the second trade I took today, and it traded at the 50, rolled over, got a first target, and then came back up. I moved my stop to break even, and you got a +3 on that for the first target of +3. This one was only okay. We were in this uptrend here, like this, and all of these retracements had broke the 60-18 and then still gone higher. So from lows, we broke the 60-18 and then went higher. Broke the 60-18, went higher. This one I liked because we were at the 50% and we traded just underneath the bottom of the first 30-minute low. That was this gray line here. And so by zooming in a little bit and then drawing the first retracement after that 5-minute traded, that's why I decided to take it. Swing low, it's kind of weak, very weak actually. It was just one little red candle, and it really didn't even break. It broke the candle before it, but not the greatest of trades. Probably could have skipped that one, but it got me a first target, and that's the nice thing about doing a +3 first target. With a 2-point stop, you're still 1.5 times your risk. You can get a first target. You can essentially be wrong on the trade, so to speak, and still come out with a little bit of a gain. And then backing up a little bit to the first trade I took, there was no 5-minute breakout today. I'm sorry, 15-minute breakout, because, same with yesterday, because we filled the gap. So see how this first 15-minute candle traded at yesterday's close? Yes, we moved down, but if you come in here and you look at the actual price that would have filled you, we ended up dipping here, dipped down, and it came up and stopped you out anyways. So that has been working very well, to not take those 15-minute breakouts when we come in and fill the gap. But the first trade I took today was actually a counter trend. So we talked about, taking a trade off of a 5-minute level, but doing so after the 5-minute trades, taking the trade on the 512 tick chart. That was the last one that I just showed. And then this would be more of a counter trend trade where you're going opposite the trend when you get a low tick at lows, a low nicey tick. So this was 709. And here, 709, low tick, low price, little double bottom, pretty small, but if you can move quickly enough, these can be, sometimes you can catch really big moves. Now this one didn't move super far. It traded in about 1.25 points, and then I just trailed my stop on the next retracement, trailed it up again, got that 3-point first target, and then just kept riding it up on the retracements here. I liked this as the kind of the third retracement as my trail stop, because I figured if it went into an extension high to high, that also the 61/8 were close enough. So I just used the lower one, and then that's where I was taken out, and then reducing down to 2 contracts. That gives you 3 on the first contract, and then 2.25 on the second with the trail stop. So those are the trades for this week. The last thing I want to touch on real quickly, I know I'm moving kind of fast, is the NQ, because I know a lot of people are trading the NQ or like to trade the NQ, but gosh, that thing moves so dang fast. And so in order to really slow it down and make sure that you're getting the best entries if you're trading retracements, you really need to look to that NASDAQ tick. So same thing as both of these charts here are the tick. The left one is the ES, or the S&P. I'm sorry, the left one is the NYSE tick. The right one is the NASDAQ tick. And on the NASDAQ, I've got a candlestick chart and no moving average. And then on the 512 tick chart, I don't have the Heikin-Ashi study. For whatever reason, I like the NQ this way. I feel like it ironically slows it down a little bit more for me, just by seeing the candles as they are versus the Heikin-Ashi on top and the moving average on top. But this is actually yesterday's trade, and I wanted to show you that. So this top line here, I've just kind of highlighted the highs on the NASDAQ tick here. And you want to make sure that if you're putting on a short, first, you break a swing low. So this would not be a good short, because you didn't break the swing low. But once you do break the swing low here, you want to make sure that when the price is coming up into the 50%, that you're coming up into a high tick. So this came up here and traded at 653. And then if you come over here and you look at 653, we're up here in a high tick, 653 and then 654. It's kind of right at the end of the 53 going into the 654 minute. And that gave us a high tick that lined up with kind of the prior high tick, right around this 700 area. So you want to make sure that if you're getting short in high ticks, and if you're going long, you're getting long in low ticks. Coming over to this next one here, like, you want to really make sure that so if we look here, 657. Okay, so if you have this drawn up, let's pretend like we're in yesterday and we're doing this in real time. Okay, so the market makes its retracement. When it does, you can go ahead and draw that. Oh, this needs to go over. You can draw the retracement. Like, I draw it up and I put my order in like when we're way down here. Okay, we're not even close to the 50% yet. And then what I do is kind of hover over the price, and I will cancel the order. This is speaking about the NASDAQ here. I will cancel the order if we come up and we're not in a high tick. And you'll notice here, we came up, and okay, this is 57 and 657. We are not 657, 657. We are not in a high tick. We're way down here, but the high ticks are up at 700. So this is one where, canceling that, and then look what happens. We come in and we rip through, and you're talking 1430 all the way up to a 1446. I mean, that's a big break through the 61.8, definitely going to stop you out unless you have a massive stop, which I wouldn't do. So, even though it rolls over, if you're stopped out and you're not in the trade when it's going down, it doesn't do you any good. So really lean on this NASDAQ tick if you are trading the NQ. And I think you'll have a lot better, well, I know you'll have a lot better entries and better trade management by leaning on that NASDAQ tick. You can get away with a little bit more on the ES because it's not moving so fast. And I really like the ES for that reason, but there are sometimes some really good moves in the NQ, and you just got to be a little bit more diligent, and it does take a lot of practice. But if you're just looking at the ES and the NQ, you can simplify things. You can focus in on 2 markets, and after a couple months, you can start to get the hang of things. So if you like these videos, give it a thumbs up, and I hope everyone has a great rest of your week. I will talk to you all soon.